Good afternoon, everyone, and thank you for joining us for the 2025 Annual Member Meeting. I'm Michael Cameron. I'm the Chair of Equip, which includes Catholic Super as a division of the fund. Today, when we refer to the fund, we'll mean both brands working together as one. To our Equip Super and Catholic Super members, welcome. Now, I acknowledge and pay my respects to the traditional owners of the land on which I'm speaking today. Our presenters today include Chief Executive Officer Scott Cameron, our Chief Investment Officer Andrew Howard, and our Chief Experience Officer Carrie Norman. We're also pleased to have other board members and executives in attendance. So with a quorum of directors present, along with our auditor and actuaries, I'm pleased to officially open this year's annual member meeting. Before we move into the agenda, I will just take a moment to share some important news. After more than 6 years of outstanding leadership, Scott Cameron has announced his intention to finish in the role of CEO at Equip. With the recent development of the fund's strategy, both Scott and the board believe this is the right time for new leadership to guide us through the next phase of our journey. Scott's contribution to Equip Super has been nothing short of remarkable. He has led significant growth and transformation, including the merger of Equip Super and Catholic Super, and the succession fund transfers of Toyota and BOC. He's worked closely with the board and the executive team to drive strategic initiatives and has been instrumental in shaping the strong member-focused culture that we have today. So on behalf of the board, I sincerely thank Scott for his exceptional leadership and service. We'll have an opportunity to properly farewell him and celebrate his achievements later in the transition, but today I wanted to acknowledge the profound impact he's had on this fund and its members. And the board has commenced the recruitment process and transition planning for the CEO role, and we'll keep you up to date in due course. We expect the transition to occur probably around the end of March 2026, but in the meantime, Scott will continue as CEO and will work to ensure a smooth handover, enabling us to keep delivering strong outcomes for our members and employers. So before we begin today's meeting, a quick reminder that the information we cover today and the presentations that you'll see are general in nature and relate to the fund as a whole. The information doesn't take into account personal circumstances such as your individual investments or your financial objectives. If you need personal financial advice, our financial planners are able to assist. Contact details will be provided at the end of the session and also on our website. In our meeting today, I'll make some opening remarks on behalf of the board. Then Scott will provide an update on the fund's performance and our priorities. Andrew will share some insights on investments and market conditions, and Carrie will talk about what we've been doing to improve member experiences and services. As usual, we'll finish with a Q&A session, and many of you have already submitted questions, and we really appreciate your engagement. If you'd like to ask a question during the meeting though, use the Ask a Question function on the right-hand side of your screen. Please note, we can only address questions about the fund today, and your personal account questions, you should contact the Equip Super helpline or the Catholic Super Service Centre. If we don't get a chance to review your question live, don't worry. Every question will receive a response in writing in the minutes from this meeting, which will be published on our website later this month. Now, this year our board comprised 9 directors, 3 employer representatives, 3 member representatives and 3 independent directors. And as required, the chair is an independent director. The structure ensures that we have the right mix of skills and perspectives while also meeting all of our legislative requirements. Each director brings deep experience and a strong commitment to our members and the values of the fund. This is our second combined meeting for Equip Super and Catholic Super members, and it reflects the journey of bringing together the two brands that have proud histories, bringing them together into one fund with a clear purpose, which is helping our members prepare for financial freedom in retirement. The integration continues to deliver benefits for members, and Scott will share more of that shortly. Today, we're proud to serve more than 135,000 members and manage more than $36 billion in funds under management. Since joining as chair two years ago, I've seen firsthand the strength of our position as a mid-sized fund. Earlier in the year, we pursued a merger with Telstra Super, confident that combining our strengths would unlock benefits to our members. So, while the merger ultimately didn't proceed, it reinforced our belief in the value we're already creating for members as one of Australia's few mid-sized funds. We're large enough to deliver the benefits of scale, yet small enough to maintain meaningful, personalised connections with our members and our employers. Operating at scale allows us to keep our fees competitive and deliver strong outcomes. So looking ahead, further growth will help us amplify these benefits while preserving the tailored service that sets us apart. That balance is central to our strategy for the future. As a fund, we've long been recognised for the benefits we deliver for members every day. This year, Equip Super was awarded the highest platinum performance rating from Super Ratings for the 20th consecutive year and the 15th consecutive year for Catholic Super, highlighting our dedication to value and excellence. Our super and retirement income products received a 5 apples rating from Chant West, that's their highest rating. So I congratulate the team on consistently achieving these fantastic results. Before I hand over to Scott, thank you to our members for your trust and support. Whether you're with Equip or Catholic Super, you're part of a fund that's focused on resilience, value and service that puts members first. So we look forward to continuing to support you on your journey to and through retirement. So Scott will now take you through the fund's achievements over the past year. Thanks, Scott.
Thanks, Michael. And look, whether you're tuning in from a school staff room in Victoria, a remote industrial site in the Pilbara, or from the comfort of your own home, thanks for joining us today. And today is about reflecting on what we've achieved together over the past year and looking ahead to how we'll continue to support you on your journey to financial freedom in retirement. We know that superannuation isn't just about numbers, it's about people, and it's about people's futures. And at Equip Super and Catholic Super, we never lose sight of that. We're proud to be an award-winning profit-to-member super fund. And that means everything we do is for you, not shareholders and not parent companies. We support more than 135,000 members across Australia, working with employers in industries as diverse as mining, automotive, energy, education, health, aged care and community services. Together we bring decades of experience, personalised support, competitive products and a commitment to lifelong partnership. Strong investment performance is central to helping our members grow their super and retire with confidence. For the year ended 30 June 2025, our MySuper returned 10.21%. Our balanced growth option returned 10.23% and our Growth Plus returned 12.36%. These results build on a strong long-term track record. Over 10 years, MySuper returned an average of 7.22% per year, while Growth Plus returned 9.29% per year. And to put that in perspective, a $50,000 investment in MySuper on the 1st of July 2015 would have grown to $92,372 by 30 June 2025. And the same investment in Growth Plus would have grown to $121,505. These results reflect not just strong markets, but the resilience of our diversified portfolio and our long-term investment approach. We're proud to be consistently recognised as one of Australia's best value funds. As Michael mentioned earlier, Equip Super has held the Super Ratings' highest platinum performance rating for 20 years in a row now. And Catholic Super has held the same rating for 15 consecutive years. This long-standing recognition reflects our commitment to delivering strong outcomes and great value for our members. In 2025, both Equip Super and Catholic Super received a 5 apples rating from Chant West, and that's the highest quality rating a fund can receive. It's another signal that our products and services continue to meet the highest standards in the industry. And when it comes to insurance, Equip Super was honoured at the Money Magazine Life Insurance Awards. For the 4th year running, we were awarded the Best Value Death and TPD insurance in Super. And we also received the award for the Best Value Insurance in Super. Our insurance offering is designed to evolve with the life stages, and it's supported by competitive premium rates. That means fairness, transparency and value, no matter where you are at in life. Your journey with us is more than just your super balance. It's about the experience, the support, the advice, the education that helps you make confident decisions. This year, we focused on 3 strategic objectives: grow, deliver and connect. Grow focuses on strengthening partnerships with employers across diverse sectors, while deliver is about enhancing product offerings and digital capabilities while delivering strong investment performance. And finally, connect is about sharpening our focus on member experience and partnering with our employers. We launched the Super 60s campaign to raise awareness about retirement planning, reminding Australians that it's never too early or never too late to prepare. We expanded our suite of tools and educational resources and made it easier to access financial advice. Whether you're starting out, planning for retirement, already retired, we offer multiple levels of advice to suit your needs. And let me now briefly touch on 2 areas that are critical to member wellbeing: insurance and account security. This year we introduced enhancements to our insurance offering, including reduced premiums for most members and additional support for those going through the claims process. These changes are designed to make insurance more accessible, fair and transparent, especially during life's more vulnerable moments. We also continue to strengthen member account protection across our digital platforms, while helping members stay informed about potential risks and how to keep their information safe. These are important topics, and Carrie Norman, our Chief Experience Officer, will speak to them in more detail shortly. Our partnerships with employers are central to our success. We work closely with thousands of employers across Australia to ensure that their employees, our members, have access to the right products, services and advice. Our employer relations team continue to receive excellent feedback, and we're proud of the value they deliver. By offering education and advice through multiple channels, including face-to-face visits and digital platforms, we ensure support is accessible from any workplace, anywhere. And whether it's a large corporate plan or complex defined benefit arrangement, we're here to help employers enhance their employee value proposition and support their teams. As we look back on the past financial year, there have been some important developments in the superannuation landscape that impact both our members and employers. First, one of the key changes implemented during the financial year was the introduction of superannuation contributions on paid parental leave. And this initiative is designed to improve retirement outcomes for parents who take time out of the workforce, helping to close the gap in super balances over the long term. And looking ahead, there are 2 significant proposals that will reshape how super is managed in the future. The first of these is Payday Super, and this change will require employers to pay super at the same time as wages rather than quarterly. The aim is to reduce unpaid super and ensure members' balances grow consistently. And this change will have effect from the 1st of July 2026. The second one is the $3 million cap on concessional tax treatment. And under this proposal, individuals with super balances above $3 million will pay additional tax on earnings. This measure is intended by the government to, in their view, better target the tax concessions and improve fairness in the system. There's been some changes to what was taken to the federal election earlier this year, and we'll continue to monitor changes as they progress through the Parliament. Our teams are actively working with employers, members and governing bodies to prepare for these upcoming changes, ensuring a smooth transition and continued focus on member outcomes. These developments highlight the ongoing evolution of superannuation policy with a strong focus on equity, transparency and improving member outcomes. We'll continue to keep you informed of these changes as they progress. And with $37 billion in funds under management, we occupy a unique position in Australia's superannuation landscape, being large enough to scale and small enough to connect. And underpinning our strategy and purpose are our values. Members first, we act in your best financial interest. Accountability, we do what we say we'll do. Respect, we care about each other and act with integrity. And collaboration, we work together to achieve results. And these values aren't just words. They're the principles that guide our team every day as we continue to work to deliver great outcomes for you. To our people, thank you. Your dedication and hard work are behind every achievement that we've shared today. To our employer partners, thank you for your collaboration and trust. And to you, our members, thank you for choosing us and for your ongoing support. This marks my final annual member meeting as CEO after more than 6 years in the role. It's been a privilege to serve you and to lead a team that's so deeply committed to helping Australians prepare for financial freedom in retirement. I'm proud of what we've achieved together and confident in the future of the fund. And with that, I'd now like to hand over to Andrew Howard, who's our Chief Investment Officer, and Andrew will talk about markets and our long-term investment strategy.
Thank you, Scott. The 2024-25 financial year delivered another strong year of equity market gains. Economic growth and corporate earnings remained resilient, inflationary pressures eased, and central banks began pivoting towards monetary easing. This environment supported investor confidence and contributed to broad-based equity market strength. However, the first half of 2025 brought renewed caution as hawkish policy signals, geopolitical tensions in Europe and the Middle East, and rising trade frictions emerged, which generated increased market volatility. Investor sentiment was shaped by reassessment of monetary policy, the US economic outlook, and hopes for a recovery in China and Europe. These factors created a more complex investment environment, requiring careful navigation. AI-related spending continued to drive positive enthusiasm for technology company share prices. I'll discuss this in more depth later. The US presidential election in November 2024 was a major turning point. President Trump's return to office ushered in sweeping changes, particularly in trade policy. Tariff levels in the US are now the highest since the first half of the last century, disrupting long-standing global trade norms and introducing new risks for global supply chains. Despite these challenges, the global economy has shown resilience, though we anticipate more visible impacts in the year ahead. Geopolitical tensions remain elevated, and questions persist about the future role of the US in global security and the rules-based order. These developments have implications for Australia, particularly in terms of trade and strategic alignment. On a more positive note, optimism around AI and productivity gains remain high. The potential for AI to transform industries and improve efficiencies continues to attract investment. We're also seeing early signs of stabilisation in China's economy, which is encouraging for global growth and particularly relevant for Australia given our close economic ties. Despite global economic uncertainty, the fund delivered another year of strong returns for our members. It was not just our MySuper option that performed well. Our entire suite of investment options also delivered positive results to our members. This is on the back of strong performance in equity markets. These results were even better for our higher growth options, with the Growth Plus option returning 12.36% for the 1 year to end June 2025. These outcomes reflect our disciplined investment approach and ability to adapt to changing market conditions. The MSCI World Index ex-Australia, hedged to Australian dollars, returned 13.55% for the year. US large-cap technology companies were again standout performers. These include Microsoft, Alphabet, Amazon, Meta, Tesla, and Nvidia. Nvidia in particular saw extraordinary growth, with its market value reaching over US $4 trillion in value during the period. This was as demand for AI chips surged. In fact, Nvidia's extraordinary share price did not stop there. It took only roughly another 3 months for its market capitalisation to reach US $5 trillion in late October. It's the first company in history to reach this milestone. This rally was driven by robust earnings and investor confidence in the transformative potential of AI. Nvidia's performance is symbolic of the broader enthusiasm for AI-related technologies, which have become a key driver of equity market returns over the past few years. Closer to home, the S&P/ASX 300 index returned 13.7%, with Australian equities mirroring global trends. Importantly, all of the fund's investment options assessed by APRA passed the 2025 performance test, affirming our strong investment outcomes. These strong returns have helped grow our members' retirement savings, delivering on our purpose of preparing our members for financial freedom in retirement. While we're pleased with this year's results, we remain vigilant. More recently, on the economic front, the US Federal Reserve cut interest rates for the first time in 2025 during the month of September. This was in response to signs of a cooling labour market. This occurred despite the persistence of inflation, which was deemed to be manageable. The Fed cut rates again at its meeting at the end of October, with this easing bias contributing to positive investor sentiment that led to the continued upward trajectory in equity markets over this period. Here in Australia, the Reserve Bank also cut rates to 3.6% in August, its third rate cut this year as inflation moved closer to targeted levels. However, the most recent inflation data released in November has raised questions over whether we will see any further rate cuts here in Australia, with the October CPI number coming in significantly higher than expected at 3.8%. There are risks on the radar that are beginning to get the increased attention of investors. These include shifting central bank policies, geopolitical instability, and the inflationary impact of tariffs. The AI-driven rally in US tech stocks may moderate if earnings growth expectations are not met. If this were to be the case, this would put increased pressure on already stretched valuations. As a result, we expect market volatility to continue, keeping in mind that for us, volatility can also provide opportunities for long-term investors. Our focus remains on identifying new investment opportunities that are resilient and can deliver sustainable returns to our members over the long term. We are also closely monitoring developments in energy markets, global supply chains, and fiscal policy, which may influence investment outcomes in the year ahead. Our long-term active investment strategy is designed to navigate all market conditions. We aim to protect members' savings during downturns and maximise returns during upswings. This approach is underpinned by rigorous research, disciplined risk management, and a commitment to diversification. Diversification is central to our approach, not just across asset classes, but within them. This allows us to manage short-term volatility and take advantage of opportunities as they arise. We invest across listed equities, private markets, infrastructure, property, fixed income, and cash, ensuring a balanced portfolio that can adapt to the various and changing conditions that may present. We also maintain flexibility in our asset allocation, enabling us to respond to emerging trends and risks. This includes investments in thematics such as digital infrastructure and renewable energy. A prime example of our strategy in action is our investment in Aligned Data Centres, a US-based data centre platform. At the annual member meeting last year, I flagged that we had invested in this asset with an expected exit in 2028. However, in October this year, it was announced that Aligned will be sold to a consortium led by names that include BlackRock, Nvidia, and Microsoft. This deal, which is expected to be finalised in 2026, represents an exceptional outcome for our members. This illustrates the kind of high-quality, unlisted investment we can access on behalf of members, opportunities not available to individual investors. Data centres are a critical component of the digital economy, and demand for capacity continues to grow as AI, cloud computing and digital services expand. We also invest in renewable energy assets, a sector that aligns with our energy transition thematic, which we believe can deliver both financial and social outcomes. In mid-2024, we made a co-investment in a Supernode battery energy storage system in Brisbane, which involves the development of greenfield utility-scale battery and hyperscale data centre projects. This investment is developing on schedule and is expected to deliver strong net returns over the investment period of 3 to 4 years. These types of investments are extremely hard for an individual to access. So not only can we provide exposure to attractive investment opportunities, but by diversifying across geographies, sectors and asset classes, we also reduce concentration risk and are able to more effectively manage the investment portfolio through periods of heightened volatility. The performance of an investment often depends on issues well beyond its balance sheet. Issues such as the rights of workers and their safety, the responsible use of artificial intelligence, use of drinking water for industrial processes, and companies' preparedness for climate change are all examples of issues that have been considered by our team, our managers, and our engagement partners across the Equip Super portfolio this year. The consideration of these types of factors into our decision-making and that of our managers aims to take into account how our investments may be influenced by environmental, social, and governance risks, commonly referred to as ESG issues. We believe these types of issues can impact the risk-adjusted returns we deliver for our members over the long term. Where possible, we also seek to influence our investment managers and the underlying assets and companies they invest in. We encourage them to take actions that will address ESG risks across our portfolio, while also helping the fund to be well positioned to take advantage of any opportunities that may arise. Our approach to responsible investment is outlined in our responsible investment policy, which forms part of our overall investment risk framework. Our approach covers 4 key areas: ESG integration, active ownership, ESG filters, and advocacy. ESG integration includes the consideration of ESG issues in day-to-day investment decision-making through how we select, review, and engage with our external investment managers. Active ownership refers to the discussion of ESG issues with the management of companies that might affect the business asset or portfolio performance through our managers, specialist providers, and in collaboration with other investors, and requiring our right to vote at company meetings be executed. ESG filters outlines the circumstances in which we apply positive and negative filters to allocate capital towards investments which contribute to positive environmental and social outcomes, and away from certain companies or industries where ESG impacts may pose a risk to the fund. Advocacy is where we work with other investors and industry groups seeking to address systemic, cross-industry and/or sector-wide ESG issues and promote best practice in addressing these issues for the benefit of our investment portfolios. 2025 signals the end of the fund's current climate change plan, which set out an indicative pathway for the portfolio to meet its net zero target, looking at how each asset class may transition. As part of this strategy, the fund set targets across a range of areas. Pleasingly, we have met the majority of these targets. These include a commitment to measure and report on the fund's carbon footprint, which is measured as tonnes of carbon dioxide per $1 million invested. Currently, we are measuring emissions across our listed equity, corporate fixed income, infrastructure and property asset classes. these measures show that combined, these asset classes have seen just under a 30% reduction in carbon footprint over the 3 years to June 30, 2025. Whilst we are very happy with this outcome, this was not an active decision in that we did not set a portfolio reduction target for ourselves or our managers. We are also aware it's not matched by an equivalent real-world reduction in emissions. Next year, we may see emissions in our portfolio rise. As you may have heard me say before, this outcome once again highlights that managing climate risk extends beyond decisions about what we do and don't invest in. Whilst we have increased the value of our investment in low carbon technologies between 2022 and 2025, we did not meet our target to maintain this as a portion of the overall unlisted real assets portfolio. That being said, we are pleased that over 3% of our portfolio is classified as net zero aligned, according to our internal criteria. These are assets that we believe meet the standard that will be required under an economy where carbon emissions being emitted are equivalent to those being sequestered. The Fund's 2025 Climate Change Report is available on our website now. And as we developed our next strategy, we will continue to focus both on providing members with relevant information on climate risk and taking steps that will improve the resilience of our portfolio to a range of climate outcomes. We have also developed internal criteria that look at social and environmental outcomes beyond net zero. Things like providing access to safe and affordable drinking water and contributing to universal health coverage. Using our internal assessment framework, roughly 7% of our portfolio, which equates to approximately $2.5 billion at 30 June this year, contributes to real-world sustainability outcomes. We want to be clear that we haven't invested in these assets only because of their alignment to social or environmental outcomes. And in many cases, this wasn't a major factor in the investment decision. What this does signal is that both Equip Super and our investment managers are finding great investment opportunities that can deliver excellent risk-adjusted returns for our members by making positive contributions to our broader economy. We believe these investments that are aligned to the long-term sustainability of our economy and community can contribute positively to the long-term risk-adjusted returns we can deliver to our members. Our commitment to responsible investment reflects our values and our role as stewards of our members' retirement savings, which we do not take for granted. This year's strong performance is a reflection of our disciplined investment approach and our commitment to long-term value creation. As we look ahead, we remain focused on navigating uncertainty with confidence, taking advantage of opportunities as they arise, and ensuring that we have an investment strategy in place that is resilient and well placed to navigate through the twists and turns in investment markets in the year ahead and beyond. On a personal note, I would like to thank you for your continued trust in Equip Super. I will now hand over to our Chief Experience Officer, Carrie Norman. Thanks, Carrie.
Thanks, Andrew, and good afternoon, everyone. It's a privilege to speak with you about the work we've done over the past year and the difference we're making for our members. At Equip Super and Catholic Super, our purpose is clear: to help our members prepare for financial freedom in retirement. Everything we do is guided by that purpose and by our commitment to creating meaningful, personalised experiences that connect members with their super and their retirement journey. We know that life is full of meaningful milestones: starting your first job, exploring a new career path, raising a family, and preparing for retirement with the financial freedom to live the lifestyle you've worked hard for. At every stage, we're here as a trusted partner, committed to supporting you along the way. Better outcomes begin with great member experiences, and that's what drives us every day. This year, we've made important improvements to both our online and in-person services, so you can feel confident, informed, and supported about your financial future. One of the key developments has been the enhancement of our digital experience. We know that many of our members prefer to connect with us online, so we've worked hard to make that easier and more engaging. Building on the success of our comprehensive retirement handbook, we introduced a digital edition for those who prefer an interactive learning experience. This digital handbook breaks down the information in easy-to-digest modules, allowing members to learn at their own pace on any device. Topics include pathways to retirement, retiring with confidence, and understanding how much super might be needed. And because planning for retirement often raises questions, we've linked tools and support services throughout, so calculators and financial planning services are just a click away. We also streamlined the online process for joining us in retirement, and members now receive personalised information when they join, ensuring they can access the tools, calculators, videos and other resources that will best support them. Among these tools are 3 retirement-focused calculators, including our new Retirement Drawdown Calculator. Our Retirement Drawdown Calculator helps members see how their super and age pension can work together to provide income in retirement, a practical way to plan for the future with confidence. It considers key details like retirement age, super balance and spending needs, and to provide a tailored projection. Members can explore how long their savings might last under different drawdown rates, helping to reduce uncertainty and ease concerns about running out of money. Plus, it allows users to model various scenarios, such as retiring earlier, adjusting spending, or changing investment strategies, to understand the impact this might have on their financial future. Of course, digital improvements are only part of the story, and we know that great service matters, and we've continued to invest in the ways members connect with us. Across Equip Super and Catholic Super, we achieved a Net Promoter Score of plus 63 for our member service teams. Net Promoter Score is a measure of member satisfaction and loyalty, based on how likely members are to recommend us to others. And a score of plus 63 is a strong result that reflects the trust members place in us. But we're not stopping there. We've introduced improvements like online appointment bookings, so members can speak with a retirement specialist at a time that best suits them, by phone, online, or in person. And this flexibility means members can get the right support at the right time without the stress of having to fit it into a busy schedule. These improvements are all about understanding our members and making it easy for them to engage with their super. Another area we've seen strong growth is financial advice. And advice is one of the most powerful ways we help members to maximise their super and achieve better retirement outcomes. And this year, our demand for advice services grew significantly. We held 5,539 advice appointments and delivered 1,269 advice recommendations, which are also referred to as statements of advice. These figures represent a 54% increase in appointments and a 5% increase in advice recommendations that we delivered. And when our members engage with our advice team, they value the service and are highly satisfied. This is reflected in the member satisfaction rating of our advice team, which achieved an outstanding 9.1 out of 10. That's a testament to the quality of service and expertise our advice team provide. Further, nearly half of all new retirement income accounts were opened after a consultation with a financial planner, showing the trust members' place in our advice services. Getting advice early on super isn't just about planning for retirement. It's about making every dollar work harder from day one. And pleasingly, we're seeing more members under the age of 60 seeking guidance on topics such as choosing the right investment option and contribution strategies, which is a plan for how much and when to add money to your super to maximise retirement savings and tax benefits. This trend tells us that members are thinking ahead and want to make informed decisions early, which is great news for their long-term outcomes. Our advice team also focuses on re-engaging with members who've previously received our advice services because financial plans need to evolve as circumstances change. Nearly 1 in 3 appointments this year were booked by returning members, and feedback from our surveys shows high satisfaction with both the review service and the overall advice experience. Supporting our members as they approach retirement is another key priority, as it can help turn uncertainty into confidence. This year, we launched our Super 60s campaign to help members take control of their retirement planning. As part of this campaign, we launched our free online retirement starter pack, which includes a comprehensive retirement handbook and link to our retirement calculator, providing practical tools to help members plan for the future they want. We've expanded our online resources, developed short explainer videos, introduced new webinars on topics like estate planning, transition to retirement, and how to open a retirement income account. And we've also added 2 additional topics, age pension and mid-retirement checkup, which were very well received. In addition, we've brought in-person seminars to more locations across Australia, including Perth, Melbourne and regional Victoria, so members can access expert guidance wherever they are. Insurance is another area where we've made important improvements. We know how critical it is for members to have access to value for money cover that meets their needs. This year, we secured more competitive premiums, including a 2.8% reduction in the cost of total and permanent disablement, also known as TPD cover, for Equip Super My Future members, and income protection for most other members. We introduced policy enhancements to provide better outcomes, such as removing specific exclusions across death, TPD and income protection policies, refunding premiums back to the date of disability for admitted TPD claims, and enabling automatic default cover following declined underwriting applications once eligibility is met. We also continue to enhance the claims experience. Claiming a benefit often comes at a challenging time, and we're committed to handling every claim with empathy and care. We introduced a quarterly quality assurance program across all claim types, giving us valuable insights into claimant experiences and helping us implement improvements. We also launched an online claim option for total and permanent disablement, terminal illness and income protection claims, making the process faster and easier to submit a claim. To support claimants further, we introduced a dedicated death claim specialist team for Catholic Super members and are working towards expanding this service for Equip Super members. And our partnership with MetLife, our insurer, continues to deliver value for members. Through MetLife's 360 Health service, we offer confidential online health services at no additional cost. This year we extended access to all employees of selected employers and added menopause support to the service suite. There were 217 registrations for 360 Health during the year, and these initiatives reflect our commitment to support overall member wellbeing, not just financial health. And finally, security remains a top priority. We've strengthened account protection with multi-factor authentication and expanded scam awareness education. We've increased training for our staff, added fraud and scam alerts to our member communications, and updated the information on our websites to help members stay vigilant. We're also part of several industry groups that share information about scams and fraud, so we can respond quickly to new threats. Protecting our members' information is something we take very seriously and will continue to review and enhance our systems to keep accounts secure. And before I wrap up, a quick reminder about keeping your super safe. Firstly, keep your login details private. Never share your password or your PIN. Beware of scams and phishing emails. We will never ask you to share login information via email or text. And regularly check your account activity to make sure everything looks right. And lastly, keep your contact details up to date so we can reach you quickly if needed. For more tips, we encourage you to visit the security section on our website. And as we look ahead, our focus remains the same: delivering great member experiences and helping our members achieve financial freedom in retirement. At Equip Super and Catholic Super, we're more than a super fund. We are a partner for life. From improving digital tools to delivering personalised advice, from supporting employers to enhancing insurance and wellbeing, everything we do is about making a meaningful difference to our members. Thank you for your time today, and thank you for being part of this journey with us. I'll now hand you back to Michael to take us through the final agenda items for today.
Thanks, Carrie. Well, that concludes our presentations for today. So thank you to all of our presenters and also to the Equip Super and Catholic Super team. For the last item on the agenda, we have the Q&A. So thanks to all the members who've taken the time to submit a question. We'll start by answering those questions, and if time permits, we'll move into any live questions that may come through. And as a reminder, every question will receive a written response in the meeting minutes, which will be on our websites later this month. So just looking here, our first question is from Paul, who's an Equip Super member. He wants to know, are there any plans on the horizon for the fund to merge with another superannuation fund? So Scott, maybe you'd like to answer that one?
Yes, no problems, Michael. And look, thanks for the question, Paul. Equip Super and Catholic Super have a strong history of inorganic growth, and inorganic growth, the sort of growth that generally is achieved through what we call fund mergers and also successor fund transfers. And over the past several years, these have made a significant contribution to achieving the scales and benefits that our members enjoy today. Currently, however, there's no immediate plans on the horizon for further merger activity. But of course, we do remain open to opportunities. But those opportunities need to be the type of opportunities that we believe will result in good outcome for all of our members. So hopefully that answers the question, Michael.
Yeah, thanks, Scott. Our next question is from Frank, who's also an Equip Super member, who wants to know what actions are being taken by the Equip fund managers to reduce the exposure to the likely slump in AI-focused stocks. So Andrew, this sounds like one for you.
Yeah, thanks, Michael. It's a topical question. Firstly, we believe in the active investment management of our portfolios. So that means that within the portfolio, external fund managers are making active decisions about the attractiveness of their respective holdings and the investment opportunity set, as well as the associated risks. So any AI-related holdings are also actively managed in this way. We do note that valuations for some sectors of the equity market are high by historical standards, and this forms an important element that gets factored into the research process for evaluating these holdings. In terms of overall risk exposure, from the individual member perspective, we offer a fairly wide range of diversified and sector-specific investment options. So our members can choose one or more options to best suit their needs. The allocation to international equities will also vary across each of these options. So members can manage their overall risk exposures as they see fit. Our financial advisors can also assist members in selecting an appropriate investment strategy. Michael?
Thanks, Andrew. The next question touches on some of the same themes that you've just been discussing. It comes from Courtney, who's an Equip Super member. She wants to know, is responsible investing becoming more challenging with the AI and Mag 7 stocks that really dominate the market at the moment?
Yeah, again, very topical. As mentioned in my speech earlier, our approach to responsible investment includes ESG integration and asset stewardship. Each of our active equity investment managers might approach ESG integration differently. This can impact which companies they choose to invest in, as well as how much of the portfolio they choose to allocate to a specific company. For companies in the AI sector, as well as the largest US companies known as the Mag 7, this can include specific issues like the labour standards in warehouses, as well as industry-wide concerns such as the approach to ethical AI principles. Asset stewardship can be harder with some of these companies, however, because due in part to the dual-class shareholding structure that some of them have. This is a structure where certain shareholders, often the founders, hold extra voting rights. It means that they have more influence over company decisions than other investors. But there are various approaches that our managers and our engagement partners take to communicate their views to company boards and management. This can include face-to-face meetings or could be written format or voting against specific resolutions. Each manager will adopt the approach that makes the most sense for their investment strategy and the companies they invest in on our behalf. Thanks.
Thanks, Andrew. The next question actually comes from a couple of members. Firstly, Rob, who's an Equip Super member, and Michael, a Catholic Super member. And they wanted to know, why doesn't Equip Super offer a non-lapsing binding nomination? So, Carrie, this sounds like in your area. So,
Yes.
would you like to make a couple of comments?
Sure, Michael, not a problem. And thanks to both of those members that asked that question. Managing what happens to a superannuation benefit in the event of a member's death is a critical element of estate planning. Currently, we administer binding beneficiary nominations, non-binding beneficiary nominations, and an option specifically for retirement members, which is a reversionary beneficiary nomination. The introduction of non-lapsing binding nominations, that is a binding nomination that does not have to be reviewed every 3 years, is still being considered as part of an overall uplift to our products and services. As part of any potential uplift, we'll carefully weigh the risks and the benefits. For example, if your circumstances change, such as divorce or separation, and you haven't updated a non-lapsing binding nomination, your super could end up going to someone you no longer intend it to. That's why it's so important to review your nominations regularly to make sure they still reflect your wishes. And that's the benefit of our current binding offering. Any future changes in this space will be clearly communicated with members, but it is on the review to look into, Michael.
Great, thanks, Carrie. While we've got you, we've got a question from Graham, who's an Equip Super member. He's asked the question, Equip Super is extremely Australian-centric, making it difficult for overseas members to verify their identities and access their funds. So what can be done to eliminate the difficulty and expense of identity verification,
Yes.
bit of a mouthful,
Yeah.
for overseas members?
Yeah, sure, Michael. I can answer that one for Graham. The Australian superannuation industry operates under strict government regulations and is primarily designed to serve Australian citizens and Australians and individuals working in Australia. Within Australia, we do have access to a wide range of databases, enabling us to accept certification from various occupations. However, we don't have that same level of access to verify certifiers located outside of Australia. We understand that certifying identification documents overseas can involve additional costs and logistical challenges. And for this reason, we recommend that members obtain certified copies of their identification before departing Australia. We have a proof of identity guide located under the superannuation forms section of our website. Under the update account details drop-down menu, you can find more information about certifying documents. Unfortunately, Michael, that's not an easy one to solve for at the moment.
Thanks, Carrie, I understand. Next, we've got a question from Trevor, who's an Equip Super member, who has a question about the aggregate third-party payments that we listed on the notice of meeting letter and the email that we sent out to all members prior to the meeting. He says, what is being done to rein in this manifestly excessive cost to fund members? Moreover, how much and what type of independent oversight is employed by the fund managers when accounting for these costs? So, Scott, can you provide an answer to Trevor?
Yes, I can, Michael. So, Trevor, the aggregated related third-party payments that you refer to, they largely relate to the costs associated with running the fund and meeting our obligations as an APRA-regulated Australian superannuation fund. And look, the reason they are disclosed as related third-party payments is largely because of our legal structure. But if we break them down, these costs include investment management fees, ultimately paid to external investment managers, administration service fees, ultimately paid to our external administrator, and trustee services, including paying all of our employees' salaries, office rent and other operational costs, and also maintaining our financial planning service that we've talked about today. Our operating costs as a percentage of our funds under management are below median relative to the rest of the superannuation industry. In terms of control and oversight, superannuation is a tightly regulated industry, and the trustee has an overarching obligation under the Superannuation Industry Supervision Act, or SIS Act as people know it, to ensure that any expenditure is in the best financial interests of members. And the regulator, APRA, has also introduced increased transparency requirements regarding fund expenditure over the last few years, and has publicly communicated its targeted approach to scrutinising spending, particularly where costs look out of line with industry standard. At a fund level, Equip Super has clear cost control policies and procedures, including approval processes, competitive bidding processes, annual budgeting and reporting processes, and a culture focused on reducing costs in members' best financial interest. So back to you, Michael, and hopefully that answers Trevor's question.
Good, thanks, Scott. We've got a question from Antonio. He's actually got two parts. He snuck two in. We've got time to get through this. The first question which he's asked is probably one for you, Andrew, which is, what assurance does Equip give regarding recent media reports on liquidity and the capacity of Equip to service its members?
Yeah, thanks for the question. As you note, liquidity management is very important, has recently been an issue of heightened interest for the superannuation sector. Our process for managing liquidity is governed by our liquidity management plan. That's a board-approved policy that provides very clear guidelines, processes and limits on allocations to illiquid investments. We, like all superannuation funds, operate in a highly regulated environment. APRA, the prudential regulator, has very clear requirements and expectations in this area that we manage to. We also undertake regular monitoring and stress testing to understand how allocations to illiquid assets change under different market environments. So we're very mindful of these dynamics, and we have measures in place to monitor and manage them. But we also balance this with a desire to invest in some areas of the market that provide excellent investment opportunities that are less liquid in nature. And I touched on those in my speech a little bit earlier when talking about Aligned and the Supernode battery storage asset as well. But it's something that we are constantly focused on.
Great, thanks, Andrew. And it's the same sort of theme, but quite a different part of the question from Antonio. And Carrie, this one's probably for you. Could you explain what the fund is doing to counter cybercrime, ensure the member data protection, and what guarantees are offered in regards to safeguarding our members' funds? So I know you touched on it a bit in your presentation, but maybe if there's a couple of things you can add.
Not a problem. Thanks, Michael, and thanks for your question, Antonio. Our members' security is very much our priority, and we take a number of proactive steps to protect against cybercrime by using advanced cybersecurity measures. This includes continuous 24/7 monitoring, daily vulnerability scans, and regular penetration testing by independent experts. We also have every member of our team complete regular cybersecurity training to stay alert to phishing and social engineering risks. And we have a dedicated incident response team ready to act swiftly if any issue arises. To keep your personal and financial information safe, we apply strict data classification protocols and promote secure handling practices across our organisation and third parties. Access to member portals is protected by multi-factor authentication, which adds an extra layer of security to ensure that only you can access your account information. And further, we've increased member communication to increase and raise awareness of the actions members should take to help protect their personal information and help keep their super safe. We work very hard to safeguard your funds. We operate under rigorous regulatory oversight, including compliance with APRA standards, and conduct independent audits to maintain transparency and security. And while we can't guarantee that cybercrime will never occur, we're certainly working hard to do everything possible to protect your data and funds with the highest standards of care. Back to you, Michael.
Thanks, Carrie. Well, we're pretty much out of time. Today, the time's gone pretty quickly. We have a lot of other questions to get through. But as I said, all of the questions will be answered and published on our website later this month. Let me just wrap up by saying, as your super fund, our purpose is simple: to help you prepare for financial freedom in retirement. And that means strong long-term returns, competitive fees, and personalised support and advice to help you make the confident decisions. So on behalf of the board and management, thank you for joining us today. We look forward to continuing to support you. If you have any questions about today's meeting or your super, please reach out via the usual channels, which are displayed on the screen now. And that concludes the 2025 annual member meeting. Thank you very much for joining us.